Hi, this is Greg Sierra again, and I'm back with the Other 40 Part 2. And we're just going to look at some examples. Let me just type that in here so you know what we're doing. Other 40 2014 Part 2. And I'm Greg Sierra. So I just had a general presentation before. And what I'm going to do now is show you a very typical format that a lot of Other 40 competitors, participants have used before, and go over some do's and don'ts. So this is a pro forma income statement. Pro forma means just that this hasn't happened and you're trying to estimate the numbers in these income statements. And like every income statement, it starts with sales revenue. Um, you have cost of service or cost of goods sold, more typical for manufacturing. And the net of those is called gross margin. Then operating general administrative expenses, your fixed costs, including these other expenses, and operating profit. And it's very typical to break out interest expense and income tax expense, and you end up with net income, or if it's a negative number, net loss. And here are 2 years. How many years you do, first of all, I think depends on the nature of your business. If you have a substantial capital asset into a long-term asset that survives for many years, so I'm thinking more along the lines of manufacturing, or real estate, then you would want perhaps more than 2 years. If you have something that's either it takes off, rockets off, or it crashes and burns, like something involving software, then a year or two might be adequate. That's going to depend on your situation. But let's just look at this case in 2 years. And I'm really talking more about presentation and format issues. Of course, your sales revenue needs to be your gross margin, needs to be sales revenue minus cost of goods sold. You do have to know what to subtract and add together here. In accounting, anytime you have an underline, a single underline, like under this 43,750, that means you're netting or perhaps adding the terms above, the amounts above. So this 94,750 is 175,000 minus 49,000 minus 31,250, and so on. Okay, but regardless, some of the things in this pro forma income statement that aren't working very well is it's better to use accounting format numbers. So you would, in Excel, left click, go to number, click accounting. We don't want any decimal places. Okay, for the first number, I would put a $sign, but you wouldn't include any after that. So you see automatically accounting format will left justify everything. Okay, and I'm just going to get rid of those because this is sloppy pro formas. So the numbering format, you want to get that straight. So let's go to Smart Pro Forma Incorporated, their pro forma income statement. And, it ends up looking like this. Okay, so here's the income statement. Is for year 1 and year 2 is actually in this blue area I highlighted. But the name of the company and then the title of the statement is also part of the income statement. All right. $sign at the top, but no $sign after. Everything is right justified in commas. All right, and do not put decimal points. Also, you'll notice that these are all left justified with a little indentation for these totals. Not necessary, but sometimes it helps a little bit in readability. And it's more typical. It's okay to start with year 1, but if you had year 2, that would be all right. But for a pro forma, I think most people are going to find it easier to read that way. Finally, there's one other thing you could do as a reality check for your numbers, and it's called common sizing. So this is a pro forma income statement common sized. And all we're doing is taking every item as a percent of revenue. Okay, so you take the dollar cost of goods sold divided by the dollar revenue, take the dollar gross margin divided by the dollar revenue, and you get all these percents. Sometimes you could put the dollar, if you go back here, you could put the $sign here and add another column where you put the percent for year 1. So they're side by side. But regardless, even if you present it or don't present it, just in terms of understanding your business, it would be a good reality check. So, for example, if your gross margin is below 40% for a small business, very difficult, very difficult to have bottom line profitability for most businesses in that situation. Because, for example, your salary, if you were an officer, would be coming out of this line, operating, general, administrative. So it's difficult. Also, if you're reading industry literature and it says everyone in this industry, nobody is above 50%, and you're claiming you're 80%, then you have to justify that. Do you have a different market? Do you have a niche market, which not a lot of growth but a high profitability? Do you have a breakthrough product? So it's good to do this what's called common sizing of your income statement. May help you in your presentation. Regardless, will definitely help you as a reality check. Catch any data doesn't quite fit, or data that might have to be explained. So it may just help you explain your presentation better. Okay. I am also going to send out a. Where are you? I'm going to send out to you these financial statement templates. These are not all required, but these are the financial statements. Okay. Can be a little overwhelming. I would say the only cases that you might need a balance sheet are the ones where you're going to need just a really large capital investment. And by that, I mean you're going to be investing in a large building for a restaurant. You're going to be investing in a manufacturing facility where there's a multi-year investment of large amounts of dollars. Otherwise, probably not necessary. So I'm not going to talk about that now. It's more on a case-by-case basis. So if you're in that situation, we may want to go through this balance sheet, and it can help not only in terms of communicating about the whole organization, but also help you in terms of understanding what it means to have a capital investment that covers a long-term asset versus capital that's for operating capital or working capital. Okay. So that's it. You're going to have these templates to look at. You're going to have these ProForma income statement examples with the common sized ProForma income statement. And in the first presentation, I also gave you some food for thought about control and the purpose of financial statements, especially for startup businesses. I look forward to seeing you next week. I believe it's March 3rd at 6 p.m. And we're going to run it like a workshop and try to go over your specific cases. If you have something written down or in spreadsheet form on a laptop, please feel free to bring it. We can work from that. But do try to have at least some preliminary type numbers. Okay? Otherwise, I look forward to meeting you all next week.